ahead and go over homework, and then we'll dive into tonight's lesson. We've got a lot to look at here, which is going to involve some stuff on the sim. We're going to go through and do this together as well, which should be pretty fun. Always fun to do that together. It's all pulled up there. All right. So let's see what we got. How was your homework? What do you think? Let's see what we got here. Watch this from March 9th. We were last together. When was the last time we were together here? The 5th. Okay. The dates are just flowing together. All right. Here we go. So we're going to breeze through here as always. Then, of course, we'll begin to dive into what I want to do is I want to review these. Anything that I see as common issues we'll talk about, then we'll dive into, of course, the next lesson. So I want to give a little extra on any common issues we have as well. All right. So ATRA. Break above current high of 876. Supply overhead. Watch for pullbacks into that demand area with range to 200 moving average 11 and 13. That is on ATRA. What do you have here? You're saying to watch the break of 876, then watch for price to pull back and confirm. I love this. This is greatly drawn. Beautiful job. And that's also nice because you also have the confluence of the break of the daily 50 moving average as well. So that's also nice. Good job. The XST, two ways to watch those pullbacks in the current demand, 23 and 25, range back to highs at 37. But if it breaks the highs, you want to watch it for the range to 55 and $1. So there's one thing I wanted to point out with this one here. And that one thing, do you guys know what it might be? And I want you to look at this. I'm not going to tell you what it is yet because I want y'all to be able to point stuff like this out. I want you to look at this and tell me, what do you think could be the issue that I foresee about one of these or even both of these game plans here on DXST? What do you think? It might be easy to spot. It might not be easy to spot, but I'm curious what you see and what you think. One of these I've got a problem with. What do you think it is? Not to, let me know. Everything went silent. Do you have audio? Can you guys hear me? You can. Okay. But yeah, so look at this here. And my problem with this, again, he either wants to watch it, check this out, either over the highs or off of pullbacks. The reason why I don't like pullbacks, let me show you here. And I know a lot of you are probably like, well, he doesn't like this because it's overextended. Well, not so much. Not so much. The real problem here is in a setup like this where you're trying to buy. You're trying to buy down here out of this past area of demand because, yes, it is a past area of demand, or at least it was. At this point, we're trying to buy these pullbacks, but who's to say that it's going to head back up into the highs if we have no confirmed momentum, right? If it's pulling back again into this range, you know, I don't really see, because here's the problem. It's trying to curl here, right? It's trying to curl here. So I'm more so, this is just the way that I see it. I more so lean on the side of confirmation, and I say, let's just wait for it to break out, and then we can look for pullbacks. And I think that actually ended up working out, didn't it? Something like that. Yeah, it did. So just wait for confirmation. That's my biggest thing here. You know, maybe it works, maybe it doesn't, but in this case here, I would say just to lean on the side of, let's play that confirmation. QCLS break of current high over 5, range to 570 and 7. Anytime you have, I'm going to just remind you here, anytime you have this $5 level, like a whole number level here over a level of resistance, the reason why this is so key is because in the eyes of just about every other trader out there, they're watching this up here, retest that 497. What is every trader, just let me know in chat, what is every trader most likely going to think if they see it testing 497? What do you think every trader is going to think if they think it's testing, if they see it testing 497? What are they going to say? What is it going to say? Yeah, they're going to say, I want to see the break of 5 first, because you have 5 right there. I want to see the break of 5 first. All right, if we're testing the previous high, let's just break 5 first. You know, we're 3 cents away from 5, just break 5. Okay, so look for the break of 5, then we can look for pullbacks and, of course, go from there. So the game plan is good. It's just, let's just look for the break of 5 instead of 497. Otherwise, you see it tap 5, and you say, oh, that's good enough. Well, let's break that whole number level first. Good otherwise. Yeah, this is all good. Ranges are good. Yeah, the 570 is good. I would also say to note, this level here, which seems to be key both parts here in the daily chart, what is that, like 630 or so? 630, 640, 650, something like that. Apart from that, though, this is fantastic. Good job. Good job. Nick, you've been doing pretty good, haven't you? I've been seeing you in chat. You've been doing pretty dang good. Another reminder here with this AIFF is it looks like your after hours is turned off. It looks like it. So what you're going to do, you can't see it on your screen, but you'll see it hiding down here in the bottom right. To make sure to turn on EXT, your extended hours, because it's going to change these charts entirely on the intraday setup, which will ultimately change your game plan entirely. So where you might see this as being a good opportunity, it could very well be a completely different look whenever you look at how it's traded both in pre-market or after hours. So I would suggest, I'll show you here, you go down here on the bottom right. Let me show you my other screen. Go down here to the bottom right, and you'll see where it says EXT. Make sure that both the EXT and night are selected. You'll be all good to go. So just make sure to do that before you do anything, because otherwise your levels aren't really going to be up to snuff. Make sure you get that all good. All right, let's see. SY next break of 195 and then pull back over 180 if it holds. So here's the thing. You're wanting to see a break of 195, but here's what would make me stay the heck away. All right, we have this big knife down to 120. At this point, this has given back just about everything. Just about everything. Anytime you have a day one move like this, and you want to see a day two move like what you're looking for here, the day one move, does anybody know this trick? I think we've talked about it. It's something that I speak about a lot. The day one move, right, this move here has to do what if we want to see day two? If we want to see continuation, that day one move has to do what? Anybody know? What do you think? What do you think? What do you think? Who knows? What does the day one move have to hold if you want to find continuation? Consolidate, sort of. That's close to what I'm looking for. I'm looking for a number, though, like a percentage number. It has to hold what? It has to hold blank of its move. What do you think? You're guessing 80%? So that's 50%. I want it to hold a majority of its move. I want it to hold at least a majority of its move. And if it doesn't, if it can, well, it's very unlikely that it's going to continue higher. If it gives back more than half of its move, let's just move away from it. Now, of course, 80% would mean that the stock is definitely strong. But 50% is that, like, max rule for me. Once it breaks back below and gives back more than a half of its move, the chance it is going to continue higher is extremely, extremely slim. Right? It's extremely slim. So a little rule of thumb there that would take this off your list. That way you're not distracted the next day. IBO would have to see a break over 83 cents, but has range to 107, 150, and 195. What do you have here on IBO? Let's take a look and see. And your game plan here was what now? See a break over 83. Over 83, you're saying that you have room here to 107, 150, and to 195. Okay, so in terms of levels, the levels you've got here are not wrong per se, but what you do need to consider here is we have this, look at this, where price pulls back, big move to the upside, followed by consolidation, then this reversal back down. Okay, so this is an area of supply sitting through here, and so what we'd actually do is eat that wick right there with that rectangle. Now you identify this being an area of supply. And so what you could actually tell here, and this sort of goes back to the last setup too about that 50% rule. It's given back well over half of its move. Well over, right? This made a move from about 40 cents all the way to $1.07. Gives back just about, 70% of it down to 57 cents, 55 cents. So, but again, this area of supply is formed through here. And of course, you've got these big topping tails through here as well. So there is, yeah. That'll be the issue there. Again, for one, it's given back most of its move. And for two, Again, you've got supply sitting overhead. And so if you were to take the break of 83, the problem is you're buying directly up into, again, this past area of supply. So something to think about. The only way to play this would be the possible break. If you do try and pivot, you could say, well, let's look for a break above. Then I can look for pullbacks, for an entry off those pullbacks after it confirms that retest out of the past area of now formed demand for the leg to, 107 and so on and so forth. So this would work. So your game plan is not wrong. It is more or less just a fact of, let's see price break a little bit higher, confirm a little bit higher, confirm off this past recent high, and then we can go from there. PRSO, what do we have here? Your favorite would have to see a break over 237, then pull back to that area of demand. If it holds, then you have range to 3 and 370. So let's talk about this one here. Now, my only gripe with PRSO, and you're going to say, wow, that makes so much sense. If we look at the daily chart, and again, I don't think many of you are focusing on this quite enough yet. Quite enough. We look over here at the daily chart. What do you notice? If you were to be looking for the break of 237, what do you think? I know we talked about it on Thursday of last week, but what is the one thing we're missing? What is the one thing we're missing? Let's go back and I'll show you again. And I want to see what y'all think. I want everybody to tell me. Look at just the daily chart. If it was to break over 237, what could be the problem? What could be the problem over here on PRSO? What do you think? What do you think? What do you think? What do you think? Right, so check this out. Again, this is going to make things so much easier for y'all. I want you to put this into your brains, write it down, make it a habit. Before you can ever take or write down another trade, another game plan, if it does not look good on the daily time frame before doing anything else, it is not a worthwhile setup to plan or trade. Because the daily chart is the foundation of the entire move. You form the entire bias based on the daily chart. And so if the daily chart is not there, nothing is there, right? So in this case here, where people sort of fall into a trap is they look at this and say, well, this looks good on the break of 237 because it looks good over here on the intraday charts. It's not aligned on the daily chart, right? It's super extended. And so what you run into are nasty fake outs, which I can almost guarantee you if we pull up this chart, I bet what happened here is it broke over 237 and I bet it rejected, didn't it? I haven't pulled this up yet, but let's take a look and see. I'm going to go ahead and go on a limb and say that it probably did that. Let's see. And you're going to see this is what overextension does. You try and trace these breakouts into overextension on the daily chart. Let's see what happens here. I guarantee you, if I'm wrong, then I'll slap myself in the face, but I'm probably not. Now, look at this. Check this out. It broke over 230, and what happened? Right, so it's just mega, 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 mega extended. Right, super, super duper extended, right? And so we can't really expect it to continue higher where it has nothing to base off of, right? It's super, super extended. And so these are really dangerous setups whenever you're looking for that day 2 move. So again, something to think about there. All good, cool. Yep, so super extended. Again, think of it from, again, everybody else's perspective. You know, what is the crowd going to think about this setup? Are they going to think that it has great risk to reward? Probably not. Probably not. So for that, you're going to have a lack of demand. Let's see what you got, Mike. Turb hold off at 410 for reversal, range to 435. Big tip for you, and we're going to go through a lot of this together as well, Mike. Whenever you're planning for these setups, are you going off of, see, this one has a daily chart. These have 5-minute charts. Are you, whenever you're planning these setups, using the layouts as such here, the intraday on the left, the daily on the right, in order to come up with these game plans? Let me know. We're going to talk about these, though, because the problem with these is they are more so not really a watch list plan, but more so a I mean, almost just a individual trade plan, as in these are trades that you'd be looking to take in the moment, like this one here on Turb, where you're looking at this, where you're saying to watch for a reversal off of 410. By the time you got to market open, based on this higher low trend that you're trying to maintain, you know, it would have to be way up here over 450, right? You're looking over here, this is only 6 a.m., right? But to maintain trend, this thing would be over 450 already. And so you could see why this one really wouldn't work for the next day. And so my suggestion for you, and I very rarely will use a 5-minute time frame for a watch list. Typically, it's like a 15-minute or a 30-minute in most cases. And then, of course, the daily on the right, always, that never changes. But 15-minute, 30-minute, that way you get a better idea of the overall trend. Otherwise, you sort of fall into traps like this, where these setups will not even be valid, right, going into market open, because, right, if it has to maintain this rather shallow trend, this sort of would have to, like I said, it'd have to continue to stair step higher, which by market open, this thing's at 470, 480, you know, which is already over your range levels. So something to think about there, but just let me know if you, again, use that multi-time frame approach or if you don't. But it's important that you do. It's important that you do. Otherwise, you are not getting the whole picture. AIFF, wait for the break of previous high of day 216 and confirm on past supply range to 295 and 365. What I would say with this is, like I told Nick earlier, is for this here, just use 3 and 360. Use those psychological levels, right? This being 3, this being 360, which works because those are actually, again, multiples of each other. 3 to 3.6, it's like 3, 330, 360. All right, so those multiples are super, super clean. All right, so AIFF, what you got here? I actually like this. This is not bad at all. You have the clean break of, look at this. This confluence here is fantastic. He has here the break of the 200 moving average for one. And for two, has the break over these previous highs to look for that little pivot. My only concern is it's a little bit extended, but, you know, from a perspective of how you'd have to play this, this is really the only way you could play this. So nothing really wrong with this per se. And I think it's a fine plan. I think this is all fine and good. But it is a little bit extended. It is a little bit extended, you can see here. Just a smidge. But you do have that confluence, though, of the break of that 200 moving average. So it works. It works as long as you got some confluence to back up your plans here. Let's see. Break a previous high. Look for pullbacks to confirm off VWAP. This 835 level, what is this? This is the one thing putting me off here. So you've got that 835 mentioned. Here's the thing. If you're taking a break of the previous high over 8, looking for pullbacks out of this past area of supply, you're calling it here. We have no range, right? If that 835 is right there, then you really don't have any room. You've really got no range. Maybe I'm missing something here, but let me know if not. But you really got no range. Same story here with PRSO, which we've talked about. Again, focus more. We'll talk about this towards the end, but again, that's the big thing that I'm seeing is a lack of focus on the daily time frame. I think it's being neglected just a little bit. I like that you're finding daily areas here. Break over supply and confirm above 320 for the range to 380, then again to 540. What is the float on this? I'm out of curiosity. It looks like it trades a little bit barcodey. Am I wrong? What is this? When did you have this on here? I hope you played this, brother. What a move. What a move. What was your game plan? Break over supply and confirm 320 to 380. I'm wanting to see where you found these areas here and see what this ended up doing. Yeah, what a play. What a play. So you're looking for the break of 320. Look at you go. Look at you go. Let me check and see what confluences you had back here. Break of the daily high. No, this is perfect. This is perfect for the range to 4. Then you had this massive daily gap. Beautiful job. We love to see it. That's awesome. That is fantastic. I was wanting to see price action. It looked like it was a little bit barcodey. And I guess it was this day, but then the following day on day 2, this thing really got lit up. Tons of volume. Tons of volume. How did it trade on that day? Yeah, nice. What a wild move. Good job. Good freaking job. JZXN gave back more than half. I sort of see what you're looking for, but at the same time, like I said, once it gives back more than half, I would not even give it a second thought. This is good. I do like this. But this here, I don't really like a whole lot. It's already gets sold off the highs here, so do I really want to try and take a breakout higher? You know, after it's already gotten driven down once, probably it's going to be fighting sellers the whole way up. Most likely. Most likely. What else we got here? I think we talked about this one already as well. Yeah, we talked about this one earlier as well. USEG. Now, my only question with this, with USEG, I'd be curious if a lot of you, not a lot of you, I suppose, I haven't really seen too many oil stocks, but I think what happens with a lot of these charts, because this chart here doesn't look too great on USEG, I think, and correct me if I'm wrong, did you plan this, because look how barcodey this is. Did you plan this because it was an awesome setup, or did you plan this because it was an oil? I would be curious to know if you planned for it because it was a good setup, or if you planned it because it was oil. Your game plan here was the break of 115. When was this posted? On the 8th? The break of 115 for the range to 150 and 2. The break of 115, where was this at? Let me see. Did you post it here? I suppose oil was hot the day this was posted. I keep thinking these were posted today. Break 125. Okay, break 125, I see. Posted back here over the weekend. Okay, that makes a whole lot more sense. Whole lot more sense. Break of 125. What have you got? Was it barcodey though, or did it trade clean? That's sort of the kicker there. Barcode, barcode, barcode. Yeah. I suppose you could have traded this from a game plan perspective. The levels here are spot on. From a trading perspective, I don't know that I could have traded this. Just because price action is so unbelievably, look at this. It's so unbelievably barcodey that it's not even funny. Look at this. I guess it is funny because look at this. It's a literal, I mean, that's a barcode. That's a straight up barcode. But the game plan here is good. The game plan is good. It's just a matter of how USEG trades. That's where my concern initially came from. And PR, so same story there as well with the overextension. And TX, what have we got here? Breaks over 2, watch for pullbacks around 180 for the range to 240 and 26. Again, this is good. At least you've got confluence in the break of the 200, which we've talked about. Also have talked about EDSA. Watch for pullbacks over 560. I don't like it over 560 because you sort of break structure where we, of course, have these higher lows getting put in. So if it was to, again, come back here to test above 560, you'd be playing backside. Right, so the structure would have broken to the backside. We'd have to actually play it to the upside. At that point, can you really play it whenever you're this extended? You know, I don't know. Don't know. Same story here of why this is a no bueno. And of course that there as well. TURB. I do like this. This is not bad. This is good. The only thing, again, that I'll mention here is, again, whenever you're planning these, make sure that you're planning them on either a 15-minute or a 30-minute. Typically with a 1 minute, a 5 minutes, you're going to have such a small surface area visible of that overall move, that relevant move. You're not really going to get the full picture. Yeah, you're not really going to get the full picture. Let's see. VATL, 29% crude oil price increase since Friday. Wait for break of a new high. Spread is too large to play. I agree. The spread here is large on BATL. I hate the higher price names at times. They can really have wide spreads. A lot of Oilers. GPR typically also pretty choppy, barcodey, which a lot of these are. That's also something that I would just be cognizant of whenever you pull these setups up to try and plan for them. Just ask yourself, how do they typically trade? And I want you to see this here. A lot of these stocks really aren't tradable. Right? They typically just don't have quite enough volume. So something to be aware of. TPET, what was the game plan here? UAVS, what do you have here? I'd be curious. I don't think we had any volume on this, did we? If there's no volume here, it sort of leads into sort of what I was talking about with GPR. A certain level of prediction rather than reaction, which I think is what's happening here. Yeah, so what made you, out of curiosity, Bobby, put UAVS on the watch list from the standpoint of this being a watch for Monday? And we'll talk about that as well. It's a really good talking point because I think it's something that a lot struggle with. And again, let me know. Watching for war news, I got you. So the only thing that I'll say with that is when it comes to a watch list, and again, this is just me yapping here. You can totally do what you want to do, but just my past experience. What I would do rather than having it on your watch list is I would just set a price alert or a volume alert on Webull. So if it does get news, cool, you'll be told, hey, okay, this stock's getting volume now. But the problem is whenever we have this on our list, it sort of, let's say if you have 10 stocks on your list and versus 5 stocks on your list. The list that has lesser stocks, you're going to, of course, be a whole lot more focused, dialed in. You can concentrate on what matters. And while you might not think that having this on the list hurts you, in the back of your mind, you're thinking about it. You're watching it, and that dilutes your focus on the setups that do matter. So what you can actually do, it's really, really neat. I want you to see here. If you go over here to your charts on Webull, right-click, and you'll go to create alert. And you can actually just create an alert here. Percent change, even news. Look at this. Look at this. You want to wait for news? Boom. News alert. Save. Now, whenever news comes out here on UAVS, boom, you're going to be told instantly. So I would do that in the future instead. Maybe you didn't know you could do that, but I think it's something that could really save you a whole lot of time that way too. Save you a whole lot of time in that way. Yeah, it's definitely awesome. But you can, like I said, you can set so many alerts, and I don't think you guys use this enough. Look at this. I can go here, and there's technical, look at this. Any signals using specific indicators across of the moving averages, VWAP, MACD, RSI, whatever, custom indicators, news and movement. I mean, look at this. There's so much here you can do. So you can even do volume. If I see volume that's over 500,000 shares, I want to be told, okay, cool. And so that way you don't actually have to divert your attention over to this. You'll just, you'll be ready whenever it does happen. So definitely super, super neat. Let's see, EDSA, we'll be done with these in a little bit of time here. Then we'll be beginning with our lesson for tonight. Now, first off, EDSA, and I think this is what we're going to have to preach on a little bit after we're done reviewing these, is again that daily chart. We need a lot more emphasis on that daily chart. A lot more emphasis. It's so extended. And what we can actually tell here, look at this. Just from looking at this. Right? Just from looking at this is what? It's almost looking top heavy. Right? It looks like it wants to topple over. Look, this is like you're playing Jenga. Right? Or you're building a huge sandcastle, and the more you stack, the more you stack, the more you stack. It just sort of wants to tip and tip and tip until eventually it just falls all over. And you can see here it's doing that. It's getting built up, built up, built up, and it's slowly trying to lean over, lean over. These topping tails are getting larger and larger, which means that upward momentum is shifting, and sellers are starting to come in off the highs. All right, sellers are starting to come in off the highs. We are also seeing, I want you to see this here, we talked about this, I think it was on class 3, class 4, volume divergence. What happened here? Look at this. Do we know what happened here? Compare day A to day B, I mean. Do you know what's happening right now? It is called a volume divergence, but what is that typically indication of, and what do you notice here? What am I circling? What am I noticing? You know what I'm noticing? You learned something new? There you go. But look at this. What is happening here? It's a volume divergence. What happened is price made a new high on lesser volume. That is a volume divergence, which is typically indicative of a reversal. Typically indicative of a reversal or just a shift in momentum, right? It's clearly showing a shift in momentum. There's a lack of demand. There's a lack of demand as it broke over those previous highs. With, again, a lack of volume, right? Lesser volume on the breakout day than the previous day. That's not a good sign. That's not a good sign. I want to know that buyers love it on that breakout. If they don't, then I want to stay away. All right, I want to stay away. MDCX, are you watching it over 77? Watching it over 60. Break above 60, range to 70. Break above 60. Yeah, I sort of see what you're looking at. To some degree, there's some subjectivity to this, so I can't for say that it's entirely wrong. You do have range to the 95-cent area. 150, I do think, is being a little bit possibly generous. Where I would say we have room to is what you've got to first see here is, of course, we've got 95. Sure, you have the dollar level right here. We've got the 20-day moving average here at $1.10. Then we have this 125, 50 moving average. Those are all going to come way before this 150. So I would just make sure to note these. Other than that, the game plan is not wrong. I don't mind this. It also maintained a majority of its move. You can see here this made a move from, looks like 38 cents to about 72 cents, and actually looks to have closed around 60 cents. So it's not a bad look. It's not a bad look. Overall, the levels there are good. I would just make sure not to forget those other daily highs. SAFX, break above 35 for the range to 45. Also not a bad setup. I don't love this massive wick on the daily chart, but maybe it sets up better on day 2. That sort of puts me off, though, because here's check this out. Whenever you're planning for setups, the first thing you do is go on Finviz and you're looking at all these daily charts. Everybody is going around looking at these daily charts. And so the issue is, you see this and most traders are going to turn their head at it. They're going to see this and say, no, I don't really love this. I don't really love this. That's what they're all, I mean, it's just a massive wick off the high, right? Huge topping tail rejection off 45. They're going to look at this and say, wow, this looks terrible. And so while it looks good here, it really does look really good here. And your game plan is not bad, right? If I was going to play this, I'd have to play it the way you've got it mentioned here. But the issue is you have less eyes on this because the daily chart doesn't look as good as it really is, right? It looks better intraday than it does on the daily. So you just have less eyes on it. So it's not a bad setup, though. You did everything right. It's just from an eyeball perspective. ANTX, hold and break above 525. For the range back to 573. Oh, what you got? What you got? What you got? This sort of goes back to the same thing again, though. Daily is so extended. The daily is so extended. But that's really, like I said, going to be the big thing that we have to talk about a little bit tonight before we can even move on. Again, extended daily setup. Extended daily setup. How many of you, whenever you're building out these watch lists, really put yourself into the shoes of everybody else out there whenever you're looking at the daily? You pull up the daily first before doing anything else and say, what would I think of this setup if all I could see was the daily chart? What would I really think? Would I think that it was overextended? Would I think that I had range? Would I view it as an awesome opportunity if all I could see was the daily chart? If I couldn't see anything else, if I only saw the daily chart, would I say, wow, this looks incredible? Or would you just keep on scrolling past? What do you think? And so how many of you are actually doing that whenever you're building out these watch lists? You try, yeah. But just make sure, again, don't overthink it. Do not overthink it. Just ask yourself, if I could only see this time frame, would I fall in love with this? And if the answer is no, take it off. If there's any red flags, take it off. Because again, the problem is, if you even mildly think that, so do thousands and thousands of other traders out there, which again is going to hurt and limit the amount of demand you find in your setups the next day, the amount of eyes you have on your setups the next day, which is not what you want. We want to have the most eyes on the stocks we're trading as possible. So that's just something that I feel like we've got to work on a whole lot more, because a lot of these setups we go through are either extended, like you look at here on, again, we talked about PRSO, extremely extended. AIFF was a little bit extended, but again, I sort of let it slide because of the 200 moving average right there, 215. Again, extended, overextended, right? And the list just goes on. And so just remember, it's always better to have nothing or very few than it is to have a lot of stuff that you can't really trade. So something to just think about. Just think about it. Let's sink in, take some notes. Do we have any questions about any of that before we get moving on? Let me know. Then we'll go ahead and crank into the new lesson. Any questions? But again, that's what I want you to work on, is just make sure you're really asking yourself, how does the daily chart look? You want whatever your game plan is on the intraday chart to also be aligned on the daily chart. If the daily doesn't look good with that same game plan, you're done. Right? The setup is just not a good setup. Do I always use 50% rule? I do. It has to hold a majority of its move. Yep. All right, let's see. All right, so let's go ahead. I want to pull up some pretty notable movers. We're going to break them down together about how we trade them based on what we've taught so far, and again, how you can manage risk, and identify multiple pieces of confluence. So let's look back. I'm trying to think what we had. We've had so much crazy movers. What do I want to look back and play? Okay, let's do this. Let's go back to some of these crazy moves from not too long ago. Let's go back to XWEL. We're going to break this down together. Back from, what day was this? I think it was the 25th of February. Something like that. Right about one, let's see. And this is my favorite part of this show. Being able to go back here and do this with you guys, this is so cool. Check this out. Check this out. All right, so let's go back and let us zoom out here a smidge. Where are we at here? Where are we at? All right, I gotcha. Cool. All right, so first and foremost, let's break this all down together. This is going to be pretty fun. Now, this is a simulator, of course. This is on Thinkorswim, which I hate the platform. I cannot stand Thinkorswim, but they do have the best sort of interactive on-demand feature, so we're going to make it work. So we look back here at XWO. We're going to break down every single part of this chart, this move, this everything. Now, the first thing you notice here on XWEL is what? Again, I want you to look at this. We're going to break this all down together going into market open. What is the first thing you notice with this here on XWEL? What would you have to do or watch? What do you think? Just based on this, based on what you're looking at, don't give me an exact level. Just give me a vague plan of no levels needed. But what do you think? Let me get chat pulled up here. Break downtrend, break high. I want to see you guys participate. Everybody chime in here a little bit. So let's mark this up together here. What we've got formed right now, we have this lower high, lower high, lower high. Okay, so we have this really tight, look at this, really tight wedge going into market open. So what do I have to see, y'all? Again, really look at this. Let's use some of these lessons here. Break over 80. Okay, break of trend. Well, let's make some mental notes here. Look all through here. What keeps happening at this price range? Okay, so what I want to look at here is what confluences do I have on that breakout? Okay, well, let's see. Let's get our rectangle tool, which, God, I hate drawing on this platform. It is such a pain. We can identify this as being an area where sellers just keep on finding this. Sellers, can you see what I'm getting at here? Look at this. Let me zoom in a little bit so you can actually see. So look right here. Sellers continue. Every time it tries to pop here over VWAP, which is this orange line, of course, sellers, 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 sellers. Okay, so sellers just keep on finding this thing on the break of VWAP time and time and time again. So this becomes an area of supply. Okay, so now we know if I'm to try and take the breakout here, I'm not just looking for a break of trend where you're going to get rejected. I'm looking for a break over this past area of sellers, right, where supply is sitting. Then look for confirmation for a pullback opportunity, right, for the continuation higher. Do we understand how to identify these areas of, again, just forget that it's called supply, just call it sellers. Just call it sellers. Where do sellers continue to find this time and time and time and time and time again? On the break of VWAP. Over and over and over. Okay. Do we understand this? Before anything else, do we at least understand this? You do. Okay. So I know, let's mark this up here to keep it all clean. I need to see the break of this past area of sellers, which are sitting right here at 90 cents. Look for price to confirm, back off 85. Where am I getting 85 from? 85 or just the bottom of these wicks. Keep it easy. Keep it easy. Keep it easy. Keep it easy. Okay. Bigger thing here is just a break of 90. All right, keep it easy. Past that, let's zoom out a little bit. What else do I have here in terms of key levels? Well, I've also got the previous high sitting here at $1.10. And I've got psychological resistance, of course, sitting there at $1 as well. So we can go ahead and mark that up too. So I've got $1 to $1.10. We can zoom out here on the daily chart and see where else do we have range to. Of course, we have $1. You see $1.30 here. $1.25. Then we have $1.40. Okay. So get all these levels all marked up. Good to go. Now we are all good. We've identified our range on the daily, identified our levels on the 5-minute chart. And what has to happen here for this to be a valid trade? All right. So again, the only way to play this is the breakout over 90. Look for pullbacks to confirm for the range back to $1, $1.10, $1.25, $1.40. Cool. All right. So what we're going to do, just for practical purposes here, we're going to change this. What chart do I have on the top and bottom here? 920.50. Okay, let's actually change this down here on the bottom to a 5-minute chart for confluence. All right. Which, of course, whenever we're trading, we always have our 5 and our 1, right? For confluence. All right, so check this out. So what we're going to do is we're going to play this. Let me get the 1 minute on top. And we know what the game plan is here. This sort of goes into the whole no break, no trade mantra that I'm always so on about. We can't play it until we get breaking out higher. I don't care what you think is going to happen. And the problem that I used to have for so long, and I'm sure a lot of you struggle with this as well, still to this day. You think that, here's the thing, let me pause it for a second. You're like, well, I know that if it breaks 90 cents, this is a great setup. And so what a lot of people will try and do is take it early and think that being early is better, right? You think that, oh, let me just buy it down here 82 cents and just try and get the now. You have to watch for the breakout for a reason. That's, it looks good where it does for a reason. We have to find it breaking out first, unless we don't have, we won't have risk to reward in our favor. So, nowhere near can I play this. All right, so keep watching this here. Let me fast forward a little bit. So we're not just wasting time here. Okay. So first thing to note is what's happening here. Take a look. Take a look. This is pretty interesting. What just happened? On the 1 minute chart, what just happened? Rejection. Okay, so we tried to break and it rejected. Gotcha. Good. Let's keep on playing it. So right now, what we actually have to identify is, I want you to check this out. Where we have supply sitting through here, of course, we're looking for that pivot. This also becomes an area of supply because a seller came in over that past high. So I can actually mark this up here. Let me get my other drawing tool. And we'll actually clear the first one out. Oh, hold on. This is why I hate this drawing. It's so much less intuitive than Weeble. Okay. So now we have that area of supply sitting overhead because we know it tried to break out, failed to do so. So the only way I can play it now is to break over that next high. All right, so it broke 90 and rejected. Now it has to break over that past seller. So it's trying to again here. All right, it's trying to here. But I can't play it yet because, again, what happened is it failed to break in a strong way over that 90-cent level. It broke and rejected bigly off the highs. Now it's trying to get breaking out. Let's see what happens. What's going to happen? What's going to happen is it tests that previous high. Let's fast forward. There it is. So now we have a full body candle above this previous high. What I want to see here is a strong candle close over this rejection candle. And again, I want you to really see what's happening here. Look at this candle close. Boom. So now what happens here? Again, let's really think about this. We try to break over that 90-cent area from pre-market. It tests the breakout, and we see this topping tail rejection candle. This signals sellers. Pulls back again, and then it pops back through. This time, however, we see a break of that previous high with a full body candle to the upside, and that candle closes strong over that previous high. Now, what do you think I'm looking for at this point? Your confirmation really was that candle closed above that previous candle's high. So what the game plan from now is, because the game plan here was just to look for the break over 90 cents. Anything after that, it's cake, right? This thing looks awesome. So I know that if I was to play this, based on my game plan, I have to see it hold down here off the bottom of this zone, right? And then I've got range here to, you know, $1, then $1.10, and so on and so forth. So from current entry, I mean, I'm sitting here at about, what, 93 cents. Max risk would be around 90 cents, give or take. About 3 cents of risk. And I've got range here to $1 a share, then $1.10, and so on and so forth. Well, to $1 a share, that would already give me almost a 3-to-1 risk to reward, just about. Just about. Confirm bottom, entry, hold. Yeah, so really what this is from here. I know you can't really tell because of how slow the simulator moves, but this was a massive move in real time, and I'm sure you might remember this, but it was about 2 or 3 weeks ago. But why this one is so interesting is you have this really strong break over that rejection candle high, where there's actually enough conviction to just go ahead and nail the entry on this candle close. So once that candle closed over that previous rejection candle's high, this was the entry candle right here. This was the entry candle right here. And the reason why that's okay in this case, for one, the strength of that break of that previous high, but for two, risk to reward was already in our favor. We didn't really have to look for a pullback. In this case, you had sort of that confirmation already, where it's putting in place, I want to show you here. Putting in place this really tight trend, you can see here with this, again, previous low to higher low and so on and so forth. Again, expecting that continuation higher. So in any case, check this out. So what I do here is let's just go ahead and figure the numbers up here. 93 cents to 89 cents. Let's just factor in 5 cents of risk. We're at 4 cents. Let's just factor in 5. Keep it easy. For example's sake, we'll do $100 a share of risk, and we're going to trade this together. We're going to trade this together. And so in this case here, let's say I got 5 cents a share of risk, and I want to risk $100 in the trade. Okay, then what am I going to do share count-wise? Of course, you've got hotkeys, so that will, again, speed up the process in the moment. But for this example, again, I'm just curious if you know and remember how to size into these trades. How many shares do I take if I'm risking $100 in the trade and I've got 5 cents a share of risk? Do you know? Do you know? Whip out the calculators in your mind. $2,000, okay. So you grab up your 2,000 shares. All right, take the entry. And so I know right now what is going to invalidate this game plan. Can you remind me? What's going to invalidate my game plan? What am I going to do if it gets invalidated? What confluence do we have? What confluence do we have? What has to hold? If it breaks 89, okay. What on the chart outside of that price area, what on the chart is sort of backing that up? Bottom of supply, what else? The 9 EMA, good. Yeah, exactly, both of those. So you have this multi-piece confluence, awesome. All right, so let's roll the dice here and play. And again, we know we have range to $1, $1.10, $1.25, $1.30, and so on and so forth, based on those past levels which we identified prior to this. So check this out. Now, the big thing that I want to say here, first before doing anything else, is you have two things that can happen in a trade. On one side, you can invalidate. On the other side, you can validate. Everything in between does not matter. And so whenever you're in a trade, what I notice a lot of people will do is micromanage their positions. What I mean by that is they will panic sell for profits, panic sell for a loss. They just micromanage and don't let the trade work out. Again, two things can happen. You're either right or you're wrong. Until one of those things happens, you do nothing. You're either right or you're wrong. When you begin to see that you're wrong, okay, let's go ahead and cut this, move on to the next trade. You're not going to win every single trade you take, but of course, allow it to tell you that. You're going to be wrong sometimes. You're going to be right sometimes, hopefully most of the time. But until you're either right or wrong, let it tell you first. Let it tell you first. Otherwise, you are cutting some of that position before the stock even moves. which again gives you this sort of lopsided risk to reward because every trade you take, you're just panic selling. So you enter with this, specific amount of risk, but you never are really taking that risk because you're pulling risk out of that position as soon as you take the entry, right? So you're just, right? It's just that asymmetric risk to reward in a bad way, So as it confirms your thesis, which looks like what? The confirmation of thesis has happened. That's clear. That is clear. And now you're testing $1 a share, which was level of resistance back from pre-market. And what I know here is, for one, I had an entry here at 93 cents. Risking off of the 89-cent level, where the 90 MA did set. Now, in this case here, what are the two steps now that I'm going to take as price moves up in our favor? What are the two things I'm going to do? Increase stop. What am I going to raise my stop to, and how much of my position am I going to trim? Do the math here, right? So if I had a 93-cent entry, currently I'm up at $1 a share, so I'm up 7 cents a share, which is over my 1-to-1 risk to reward, which, as you know, if I am to sell half, it makes the trade completely risk-free. At this point, you're guaranteed profit because, of course, you are greater than a 1-to-1 risk to reward already. %50 trim and stop to the bottom of the last candle. Okay. So what I would do in a case of this, so we can actually see underneath that last candle's low, which is right here at 92 cents. You've got the 90 MA directly beneath it at 91. I would just say lean towards that. Lean towards trailing the 9 instead. The 1 cent's not going to kill you. Either way, of course, you are, in guaranteed profit regardless. So I'd lean more towards the side of giving it some more room. So you lock in a half, and at this point now that you have trailed your stop loss up a little bit tighter, of course you're you've raised your stop about 3 cents above your initial stop loss, and you sold a half, and so by doing so, this is now a guaranteed profitable trade. This could flip off the highs and make its way all the way back down here to 87, 89, whatever, and you'd still be sitting here with profit, even if it came all the way back down to your initial stop loss. You'd still make money. All because, again, you sold a half to lock in a half of your profits and raise that stop loss. It is now guaranteed profit. But even if you didn't raise that stop loss, you are still going to, at worst, be out with a few bucks of profit because you have sold half. Should you set the stop tight at the 9 or a cent under? So obviously, whenever we're trading, we don't actually use a physical stop loss. So that's sort of obviously it's mental. So it's more so just the break of. So if it was to, say, break the 90 MA, that's just my exit. Or if it's the break of 91 cents, that's just my exit. So it's not like if it just taps it, I'm not going to take an exit. But if it pulls back in a way that it breaks beneath, that's my exit. Does that make sense? Okay, yeah. If it was to break beneath and just fail to hold, then that's right, I'd cut it. Yep. That's right, cut it. Unless it's just one of those things where it's like, if it hits this level, I've got to get out. All right, I've got to get out. But for the most part, let it break. Let it break. All right. So yes, we have raised the stops and stock squeeze higher. Now what do? We knew we had range here to 110. Was it 110? What did we say levels were? Let me check back on my charts here. Yeah, 110. And then 125. You can see here better on the 5-minute chart. So now we're underneath the next key level, which again was the pre-market high. And so again, what do? Let's just take some more trims. Okay, easy. Take some more out. Take some more out. Lock her in. Lock her in. Now what do we do? What do we do now? Okay, well, look at this. Take a look. This is exactly how we execute in real time every single morning. And there's a system to it, right? It's not just guessing. There's a system to it. So check this out. Anytime you have these big extension candles, look at this, where it breaks up through this the whole dollar level. It breaks up through that whole dollar level. I need what? What has to happen here with this candle? Do I want to see this massive candle flip back and give its whole move back? Of course not. So if I wanted this to continue higher, what would I have to do? I needed to hold one. Yeah, of course, I needed to hold one. So I needed to hold one. So, dollar's got to hold. The dollar's got to hold. So let's see what happens here. Pulls back to retest. One, I need to see that level hold. I need to see the level hold. Again, I've got a quarter left. And I'm watching to see that whole number level hold. And see, the fact is, if you were to have had a hard stop loss or sitting at $1 a share, of course, you're going to be stopped out of this. You're going to be done. You're going to be screaming, oh my goodness, I get stopped out every single time. That's exactly why. So just watch it. You're so deep in profit. It's guaranteed profit. Just watch and see if it holds. If it doesn't, then it breaks it beneath the dollar. Of course, cut it from there. Again, levels were 110, 125, 140. 110, 125, 140. Until it gives you a reason to take a full exit, let it work. Let it work. Be patient. Notice again how it's holding off of the psychological level. And now, retesting that previous high. And there it goes, extending now over that 110. Now, what do I have to see happen with this candle here? We talk about this a lot. And the biggest thing that we always talk about is anytime you have lower high, or even a flat top high, and you have a candle make a new high, right? You have a candle make a new high. What has to happen? Or I guess I should say, what can't happen? What cannot happen right now? Who knows? What cannot happen? No rejection. Can't flip back. There you go. It cannot flip back beneath the previous candle's high. If it does, the breakout fails, and it's done. That is a massive reversal indication. So what I've got to see happen here is I've got to see continuation. I've got to see it hold off these past highs. And if it doesn't, then it's done. Right? If it does, then it's done. Let's see what happens. And of course, from a stop loss perspective, does anybody know where the stop loss goes? With that in mind. You're not going to keep it at $1, of course. So what do you think? 110. Not so much 110. No, that's a little bit too high, right? We have to see it hold off these previous highs. All right, back here off these previous highs. So you could actually rock with, really, you're looking more so like a 105. I just want to see it hold off these past highs. Hold off those past highs. 105, there you go. Perfect, exactly. Exactly. Good job. Now, as this candle next breaks up into those new highs, from there you can sort of take that prior bar low approach and say, okay, now I want to risk 110, right? Which is the bottom of this next candle. And so you can sort of trail the bottom of that next candle and look for that continuation. We knew we had range to 125, of course. And so you can look and see, there you go, back to 120. Now we're testing 120, which we knew back here. Look at this. Resistance at 125 and then up towards 140. So now what do we do next? As we near the next key level, we are going to, Yeah, we're going to trim. There you go. This is where I would typically get down to just runners left. I would begin to get down to runners left because I only had room here to 125 and 140. We're sort of nearing that 125. Over that, we have the final sort of grand slam range, I call it, to 140, which we can let some runners trail to. Of course, right now, stop's been raised to the prior bar low. I want to see this continue higher. We know we've got 125 and 140 here to keep eyes on. And again, you know you've got that 125 right there overhead, so we want to see how it respects off that 125. And you'll see how this whole entire trading process so far really puts into play everything that we've talked about so far, from the indicators, supply and demand, entry criteria, managing risk, the whole 9 yards. Now, as we get a little bit further through this as well, I believe it halted up here, so that could be why it's, yeah, it did halt up here. It's frozen. But what I was saying here, as we get further along in the boot camp, we go through the, of course, time and sales, level 2, and all that jazz. We'll begin to, of course, add that to the equation as well. You can see we have level 2 and the time and sales on the screen here as well, which will help a ton going forward. But for now, being able to hopefully see this sort of all put into play in the moment should help you out a ton. Probably easier to visualize than just hear me yap. Now let's get past the halt here. Okay. So stock resumes and tries to head higher. Test 128, a new high. Well, I want you to see what happens here. Keep an eye on this candle, and I want you to see what happens here. Based on what we've talked about so far, it resumes and tries to begin making new highs. Okay, let's play it. Of course, at this point, you're deeper up in the profit. I'd probably take a little bit more out and get down to just runners. At this point, you started with 2,000 shares, you're down to 150. Of course, current stop loss will be raised to what? The bottom of the prior bar low, which is right here off 117. And right now you're looking for that continuation. I wish it was slow in real time. I'm serious. That'd be so awesome. But the good thing is the more you practice like this, the more you go back and review stuff like this, you'll be able to do it more in real time as well. It's like watching tape. I'm actually going to fast forward a little bit here. And you'll see it's still trying to, again, maintain that key level there off that prior bar low. But sort of breaks it all down exactly what I think about in the moment through every single little, every little step that I take, every little thought that we sort of go through in the moment whenever we're managing these trades. And this is an exact trade that we took on the stream. The exact trade, executed the exact same way. So this isn't just like it's some hindsight execution. This is an exact trade we took, and of course, there's the exit, the full exit. And so overall in the trade there, you're looking at about a 2.3 R win, where you're risking $100, well, you made 228. You like this kind of review? Yeah, it definitely helps. And I'll show you here to compare and contrast. Check this out. This is the exact setup we just went over. Look at the entry. And the exact exit. So despite doing this all in hindsight, right, in the in the simulator, right? That's the exact way we traded that on the stream. The exact way. So from there you're out of the trade and you're done with it. Do ATPC. I wish I could, but the soonest I can go on this, I believe, is the 8th. So it lags a little bit behind. But that's the entire trade on XWEL broken down back from the 25th. Everything from why I watched it the way I did it to how we managed it the way we did it. The whole nine. Do we have any questions about this? Any part of execution, whether it's trimming, stops, the game plan, anything of the sorts? Let me know. Again, I want to go over all this with y'all, so let me know any questions you have. I want to clear it all up. Let me know what you got. Still fuzzy on supply and demand. So whenever you start viewing it, again, just to make it as easy as possible. You know, like I always say, is just to view it as where we're buyers and where we're sellers. Whenever you can view it that way, it gets a whole lot easier. It gets a whole lot easier. Where do we find significant selling pressure? Where do we find significant buying pressure? Whenever you can do that, you just identify those areas. That is your supply, that is your demand. Makes it easier. A little bit less complicated. When watching the reel, it becomes a little more clear that we have more time than we think. Yeah, there is a lot more time than you think. But the thing is, whenever you're actually in the moment, you're trading these things, right? Because this was a trade where, I mean, we were in this from, you can see here, 9:38 all the way to, I mean, it was a good 20 or so minute trade. And in the moment, it feels like everything's just, you know, flying past you. You can't think straight. Right? You feel like you just can't think straight. But it's just because you have money on the line, there's emotions involved. Right? And that's why, of course, live trading is so much different than sitting here on a sim. It's good to break down trades you've actually taken on a sim to sort of see, you know, why you did what you did and so on and so forth. But to compare the two, yeah, it's vastly different. And that's why it's so important to try and slow yourself down. That's why, like, whenever we talk about trading environments, why I always suggest, again, tossing some music on, some slower music. Because for me, if I've got slower music playing, and I know it just sounds so silly, but it really does set a mental tempo for yourself. And I feel like I can really take in what I'm looking at a whole lot more. And of course, if you're tired, you're anxious, you're, you know, whatever, it's going to limit your ability to focus and break down these moves in the moment like you need to. So again, diving into that, why it's so important. I saw people this morning over in the stream saying that they rolled into the market late today or, you know, whatever it was. You're going to be anxious. You're not going to be concentrating well as you should be. You're not going to be focused. But you've got, like you said, a lot more time than you think. You just have to slow yourself down. Like this morning, the first 10 minutes went by so fast. They really did. They really did. Yeah, it was very quick. Very, very quick. Very quick. But there's still really good stuff to be had on days like today. Like if we look back, I can't break it down on the on-demand feature yet because it's, again, a bit too recent. But stuff like this reminds me of like 2021, 2022, 2025 summer, 2022 late year into 2023 was pretty slow. Action like this out of the open reminds me of like summer of last year, which was huge. Summer of last year was huge. I don't know if you were here for summer of last year, most of you, but it was huge. You have so many opportunities. Like I said, the past few weeks we've had a hard time, or past few months, really since October. You got to think for perspective. Back in July, June, August, I was pretty consistently having like 10R green days. I mean, it was pretty consistent. 10R green days, which is huge. And those days come from opportunities like this. And this is even like today for me was about a 5R green day. Could have been a lot better if we would have gotten follow through, but you can see we sort of got stuck in this range all through here. But we started, of course, back here in pre-market. We were able to play this, and of course played some of this going into the open as well. But it's the ability to keep on going back for seconds and thirds and fourths. And of course, that's how you can compound your day, because I came in here at first and I've got that profit cushion from early, right? I take this pullback here. I get this big move to the upside. I take the pullback here. I get the big move. So I already have these two big wins going into market open. Then I take this one here and, of course, get that third, fourth win. But every trade builds on the last. The profit from this trade is taken into this trade. Profit from this trade taken into this trade. And again, I can risk the profit from this trade to build my day higher, and then so on and so forth. Where after you're up at that 1R, 2R, 3R green day, it makes it easy to build on to the last, because now you know, look, I can take 3 full-size losses and still not be red on the morning. That's a good feeling. Right? That's a really good feeling where you can just risk your profits, like I say in the morning, to build your day up higher. And that's such a good feeling, and it just gives you this massive feeling of relief where you know you can go out there and just execute your setups with pretty much no practical risk other than the profits you've already made. All right, that's it's a comforting feeling. It really is. But that's where the big days come from. The big days don't come from the days where you're stuck sideways all morning trying to get something working, right? Because at that point, you have a hard time taking the risk because you know you take one loss and now you're red on the morning. But whenever you're up at a 2, 3, 4-hour green day, you know you can go out there and take a full-size loss and it's not even going to hurt your day barely. You know, so it's just night and day. You caught almost all trades on ATPC. It traded so wide. It did trade a little bit wide. It is a $4 stock, so it was, what, a 20, 30 cent a share risk in most of these, I believe. It was pretty wide, yeah. For sure. But yeah, the opportunities on stuff like this, if it does move quickly, I would say to practice with very small size, even if it means you're trading this with a couple shares, just to build a muscle memory, try to get that speed up, because some of these things, you know, you want to make sure you can execute, for sure. For sure, for sure, for sure, because the volatility is a good thing. Your fill was bad in pre-market. Which one was it? I had it, I think it was 3 times in pre-market. I played it, the pullbacks here for this first win. Then I had it for a loss here. I had a win, I had a loss, then I had the third win here. If I had to guess, it was a bad fill on the loss. Yes, okay. So the problem with pre-market, and here's my thing too. I took a half size on this, took a quarter size on this, took a half size on this. So my loss was my smallest position. But even besides that, the problem with pre-market and why I typically don't trade it a whole lot unless I see an awesome setup and, you know, then I'll execute, is, you know, of course, with limit orders, with the lack of liquidity, you're going to get worse fills. That's just a byproduct of the lack of liquidity that pre-market has. Right? It's just a byproduct of pre-market. You've got a lack of volume, typically have wider spreads, and you can only use limit orders. And so typically you're taking exits, you're chasing your way out on the exit because you've got to try and toss an order out beneath the bid to ensure you get an exit. But with that comes worse fills, and so it's definitely not ideal. Definitely not ideal. So that's, like I said, why I'm not a huge fan of pre-market trading, because you think you get bad fills trading out of market open, you try and go caught in a knife in pre-market and try to take that exit while everybody else is also trying to take the exit. You're going to be chasing your way down to the ground. It's tough, and the thing with that is too, you toss on a limit, it skips past your limit order. You don't get filled, or you don't get filled fully. Now you're sitting here trying to drag your order down, drag it down, and trying to catch it on an exit. It's tough. And you might not think it's going to happen to you, but it can definitely happen. That's why if I do trade pre-market, here's the thing. I don't want you to think you can't trade pre-market. That's not what I'm saying at all. But you have to size smaller. All right, keep that risk in mind. With risk, there is reward. That's why I played it this morning. That's also why I never take full-size positions in pre-market. At most, I'll take a half size. At most. Typically, it's a quarter size. If I've got a lot of conviction, sure, I'll take a half of size. But typically, it's a quarter size of risk. Typically. So it all depends, but nothing ever really over a half a size in pre-market. You can't do that. You just can't do it. It carries so much more risk. I can take full size after market open, no problem. I know there's enough liquidity where I'm going to get decent fills. But apart from that, again, you just can't do it. Not responsibly. Not responsibly. It happened to you Friday. You bought with hotkeys and but your sell hotkeys didn't work. Wow. You've been using buy, bid, and sell ask. Well, the problem is you do that, and you're oftentimes not going to get filled. Yeah, oftentimes not going to get filled. So it's tough, for sure. Any questions, though, before we wrap it up? Let me know. Of course, homework I'll have posted up tomorrow will be a little bit different than the past few nights. Fairly similar, though, because I know we still have some things to work out with the watch list. Big thing with those was just to, again, more emphasis on the daily chart. No more neglecting. Get those eyes in the right place. Make sure they look good. Webull works good for you in pre so far. Yeah, as long as you've got your buttons set up all properly. And of course, for pre-market, for your entries, you typically want to set it for a buy at last price with an offset, a positive offset. For your mental stop loss, you'd want to set a negative offset beneath the bid. For your take profits in pre-market, you'd want to do a negative offset at last price. That's the way that I typically do it. So all depends on how you got your hotkeys all set up. The buy and sell arrows are through trade ideas, but what I would suggest on Webull is you can use journaling software like Trader View, which you can actually import your orders into. You can see the buy and sell arrows on your charts. You can also turn on, I forget where it is on Webull now. I keep it turned off to keep my charts clean. But you can actually get it to show you as well which candles you're buying and selling on Webull as well. A little bit different, but Webull will do it. Yeah, Webull will do it. How far back on the chart before the range becomes irrelevant? Well, I think the big thing with that is you can really tell where it's relevant or irrelevant. So it's like on ATPC, or well, let's look at a different example. Let's look back on BATL. Like, where on this do you think becomes irrelevant? Well, really anything before, look at this. I mean, up here, anything down here is irrelevant entirely. So it's just whatever makes no sense. All right, if you look at it, you're just like, well, this is way up here at, 20 bucks. Way down here underneath 13 is going to be, or even really underneath 16 is going to be completely irrelevant. So you just have to ask yourself, does it make sense? Does it have anything to do with where price currently sits? Does this really affect anything? Yeah, I know it's hard to explain, but how many days back? Yeah, there's not a set answer for that. I wish I could give you an easy answer. I wish I could give an easy answer. But the biggest thing with that is, again, just what is relevant to you? What do you view as being something that is relevant to the current area of price? If it is nowhere near where current price is, in terms of like price range, then of course it would be considered irrelevant. I wouldn't overcomplicate it though, but it's not a specific amount of days. I could look back here, on some charts, you might have to go back to 2023 if that's all you have to work with. And of course, very seldom, but at times. Definitely at times, but most charts you're going to have more recent action. Like you look back here at, say, an SGN. I mean, I can just look right here. Everything I need is all right here. Or this is all relevant. It's all in the same price range. I don't have to go back farther because I have all of the price action there to look at. I mean, I suppose you can go back further, but what's relevant is more so right here. But, you compare it to, say, something like a BATL where you don't really have anything to go off of. Well, now you're stuck using psychological levels. None of this is relevant. So it all depends. Look at SMX. How would you look at a daily on something like that? That's the one that ran. Gosh, this was a pretty wild move. Pretty ugly though now, yeah, isn't it? How would you look at this? Well, for one, you wouldn't. You wouldn't look at this. There's no real way to look at this. Look at all the splits. I've got mine set to adjusted, so I'm not going to be able to see all of those splits. Let me see what you're referring to. Oh, I see. Yeah. But from an actual adjusted perspective here, it's a super broken chart. Back at all-time lows. So, yeah, no, this thing was crazy back then, though. I remember trading this on the stream. But in any case, it's about that time. So again, I'll have your homework posted up tomorrow afternoon. I'll wait till market close again, as always. That way you can make sure you wait until the right time to get that work in. Get back here on Thursday. We'll start to dive into the next lesson, which will be journaling your trades. I want to get into that after we do homework review, which again will be sort of watch list involved. Again, I will remind you to check the daily and the homework reminder tomorrow. That'll be the main focus. And that being said, I will see you back in the morning. Have an awesome rest of your night. See you guys.